All right, it looks like we have many people in already. We're just going to go ahead and introduce and get started as we allow more families to enter into the room. This presentation tonight is being recorded and it will be posted to our school's website. So if you miss anything, if you have to leave, or if you know anyone else who missed the presentation, please share that. It will be posted on the website shortly. My name is Ms. Martin. I am one of the counselors at Cheltenham High School. I am a counselor for the last names MOL to SCH for the seniors. It does change for every grade. And I am excited to learn this information with you, as we know there are some changes to the financial aid process that are starting this year. I'm proud to introduce Miss Lisa Ware to present to us tonight. She is the Assistant Director of Financial Aid at Arcadia University. She's been there for a little over a year, but has about 25 years experience in higher ed. So she has a lot to offer. Ms. Ware, whenever you're ready, you can go ahead and get started.
Thank you, Ms. Martin. Again, thank you for having me. This is my second year, and I must have done a good job to have me back. So thank you, thank you, thank you. I'm going to share my presentation, and I'm going to go through, and as Ms. Martin mentioned, there is some changes to the FAFSA. I'm going to go over some of that this year. And I ask that you hold your questions to the end, because I may go through, answer some of them during my presentation. So let's get started, and just kind of bear with me. Sometimes I can be a little technology challenged. So hopefully everybody can see that.
Yep, we can see it.
Okay, great. Thank you. Now I'm going to get started. So this is how I like to get started with everybody. Just take a couple of moments and just look at this cartoon, because I'm sure some of you feel like this or will feel like this. And this is just to give some financial aid humor to start tonight off. I know the financial aid people have a bad reputation in some universities, that they're mean and they don't want to talk to people. But here at Arcadia, I say that we are some of the nicest financial aid people you could ever find. Our doors always open, and we always like to answer questions to families and students, and we try to be a friendly bunch. So I hope I got a little giggle or chuckle from some families. So tonight we're going to just go over some financial aid basics, which is what I call Financial Aid 101. And we're going to talk about what is financial aid. We're going to talk about some sources of financial aid. I'm going to update you with some new terms coming with the 24-25 FAFSA. We'll go over a little bit of the application process. We're going to talk about some financing alternatives and comparing your aid offers. And then I'm going to give you some helpful websites. And Ms. Martin, if you feel like I'm talking a little fast, please let me know. So what is financial aid? Financial aid pretty much is composed of grants, scholarships, and loans. Grants, as we know, is free money, and that's typically broken down between federal and state aid. Scholarships is also a form of free money. And when I say free money, I mean that is money that you do not have to pay back, which is the money everybody loves. And so your university or college will offer you some type of scholarship. And then you have outside scholarships. Outside scholarships is normally some organization, some churches, parents. Some of your employers may offer scholarships. Some of the high schools offer scholarships. And a lot of your banks offer scholarships. It's right on their website, how to fund for college. And it's just a matter of your child and you putting the work in to find various scholarships. The other form of financial aid is loans. There's always going to be a loan on your financial aid offer. You have an option to accept it or deny, but your loans are broken down into federal direct loans, which are under student's name and sometimes the parent's name. And then you have a host of private private loans. So we're going to talk about what need-based aid versus merit-based aid. Your merit-based aid is your scholarship that is offered from the admissions department, and that will be based on the student's application. The merit-based aid is normally renewable each year, as long as the student keeps up the criteria. And the criteria typically means that they're full-time each year and they keep up the GPA requirement. Each school, the GPA requirement will be different. Some schools it might be a 2.0, some schools it might be a 2.5, some schools it might be a 2.75. The school will determine what that GPA requirement is. Your need-based aid, which is again part of your financial aid, that is determined from your FAFSA. So that will change each year as you apply for your FAFSA each year. So that will be governed from your income. Employment. So we always put employment down there because sometimes a student is offered federal work study. And if they're not offered federal work study, there is some types of campus-based jobs that the student can go and apply for. These jobs are typically in some form of a department. Sometimes it's in food and housing, but it's a job where the student will get a direct paycheck, and it's up to that student to either apply it to their tuition bill or use it as expense money. I like to tell parents, if your child is able, let them use that work study money as expense money. That way there's less out of your pocket for them to go to Target and go get a pizza or the Chinese. They can always use that money for those things, those personal items. I also tell parents that if the student can work in one of the areas on campus, it's a good source of a work environment. It's a good resource for references when they do graduate and go out to the world. And the department manager typically works within the student's classroom schedule. So you don't have to think about that they're exceeding themselves. And then lastly, financial aid again is loans. And we're going to go talk about a little bit more about loans right now. So the difference between a federal subsidized loan and an unsubsidized loan, the subsidized loan means the government picks up the interest while the student is in school. The unsubsidized loan means that the student is billed quarterly and it's just the interest, it's not the principal. If you're able to pay the interest quarterly, which is typically a minimal amount, I recommend that you do so. Otherwise, it will compound and then it becomes like a credit card bill. The payments on both loans, the principals, will go into repayment 6 months after the student graduates or 6 months after the student drops below half-time credit, and they typically have at least 10 years to go into repayment. And the variable flex interest rates change each year, and we're typically notified in July. As we know, the government is constantly changing the rules about this, so you always need to go on to studentaid.gov to stay on top of what the latest regulation is. We also have the Parent Plus loan. The Parent Plus loan is typically a loan in the parent's name, and it's a credit-worthy parent. Again, the payment length of time period is 10 years. However, the repayment period changes and it goes into repayment 60 days after the second disbursement. So you need to make sure you stay on top of that. You do have an option to, if there's an issue, to go into deferment or forbearance, but 4 years while the child is in school. So I just wanted to put some of the loan limits so parents will know. As a dependent student with first year in college, up to 26 credits, the maximum subsidized is $3,500 with an additional $2,000 unsubsidized. And for the total year as a freshman, they can borrow up to $5,500. From 27 credits to 56 credits, the loan goes up. $4,500 subsidized, unsubsidized stays at $2,000 for a total of $6,500 for the year. As you can see, the government is very generous in increasing the subsidized loan and capping the unsubsidized for a dependent student. So as they get into their junior and senior year, they can borrow up to $5,500 in a subsidized loan for a max of $75,500. Now I put the other scale because if there's a student who unfortunately the parents cannot borrow the Parent Plus loan, and the student needs additional funding, you can see by the scale that the unsubsidized increases, not the subsidized, the unsubsidized increases by at least another 4,000. So you can see how the changes go from 9,500 up to 12,500 as a senior. So the aggregate caps. So the student for 4 years as an undergraduate can borrow up to a maximum of $31,000, but they cap the subsidized at $23,000. If a student's, again, parent is unable to borrow a plus loan, that increases to $57,500, but the subsidized still caps at $23,000. Once a student completes their 4 years, they are now considered a graduate professional student, and they can only borrow an unsubsidized loan. The unsubsidized loans does increase. You have a subsidy cap of $65,500 and an overall combination cap of $138,500. Now, for a graduate student, a parent can still help. Instead of calling a plus loan, is now called a graduate plus loan. The same regulations and rules still apply. So I wanted to put this chart in because cost of attendance. The cost of attendance is kind of broken down into these major categories. We inflate the tuition to use the cost of attendance so we can maximize the subsidized, maximize your financial aid eligibility, so we can give you the maximum grants and scholarships that fit in there. Because if we just use tuition and fees, then your eligibility changes. So your cost of attendance will include your tuition and fees. It is estimate room and board, the estimate books and supplies, an estimated personal expenses, and the estimated transportation. So this is the information that I know a lot of you really want to know. The application process. So the FAFSA is the free application for federal student aid. You will go to studentaid.gov to apply for the FAFSA each year. The FAFSA sends the information to the Department of Education along with the state, and in this case will be the state of Pennsylvania. Typically, the FAFSA will open up October 1st. However, for the 24-25 academic year, it will not open until December. As I'm sure you all heard, there is a new FAFSA, and it's called FAFSA Simplification. Typically, I put that in air quotes, and I say that because it's still being worked on. And a lot of people in higher ed still have a lot of questions regarding that. So one of the things is, please keep in mind, just for this upcoming year, it will open in December, as we are told today. It may change, but right as of right now, it will open up in December. We have not been given a date. We're estimating somewhere around December 18th, but we're hoping December 1st. However, the state grant deadline has not changed. The deadline is still May 1st. So the award letters will be going out for most schools sometime in January and February due to the lateness of the FAFSA. One of the new caveats of the FAFSA is a student has up to 20 colleges that they can add to it versus the 10 from previous years. So I put this in here because these are going to be some new terms to look for. As I mentioned, it's FAFSA simplification this year. The student it will be broken into two sections. The student will start the FAFSA, and then they will be inviting the parent to complete their section. However, both of the student and the parent has to sign off on it. The term SAI, Student Aid Index, is replacing the EFC, the Estimated Family Contribution. It's just a terminology. The calculations is still done by the Department of Ed. What they have done was used a little bit more of the poverty index to make you a little bit more eligible, is what they're saying. You're going to see a word called contributor. Basically, this is a new terminology. It's the parent, it's the spouse, it's the student. It's the person who's going to sign off on the FAFSA. It's the person whose income is going to be on the FAFSA. So instead of just saying parent or student, you're going to see the word contributor. Another change is the IRS index. So instead of seeing the IRS data retrieval, you're going to see something called the Federal Direct Data Exchange. All it is giving the IRS, again, permission to pull in your tax information. This year, it's a requirement and not an option. So, and that's, again, it's going to prevent confusion about your taxes. You won't have to have your tax return. You're going to give the IRS permission to pull in your taxes. If you opt not to give permission, they'll still let you go through the entire process, but at the end, your FAFSA is going to show up as incomplete. So you will, to fill out the FAFSA, you're going to need what's called a student aid FSA ID. And FSA ID is basically your signature, your electronic signature. We are saying, and the best thing that I'm hearing right now from a lot of people in higher ed is to go ahead and apply for this now and have it off to the side, because it takes at least 3 or 4 days. So instead of waiting to December, you can go ahead and apply for your FSA ID now. So when the FAFSA opens up, you're already ready and waiting to go. Some of the tips is in creating your FSA ID, you are going to go out to studentaid.gov. You want to make sure that you identify yourself as either the parent, and then the student. We want to make sure that you use your name that is on your Social Security card. You cannot use any nicknames that will reject it out. So make sure that you use the correct name, that how it appears on your Social Security card. So this is some of how it's going to look now when you go out to FAFSA, to fill out the FAFSA. When you go out to studentaid.gov, this is how it's going to appear now when you go to click on the FAFSA form. And this is going to give you some ideas of how to get ready. Now, the new FAFSA is going to have a bunch of onboarding pages. And I would recommend that you take your time and read through it. It has a lot of explanations on questions about who should apply. It also explains about household changes in the household. If there's a divorce or separated issue, they explain about that. They give you a video explaining about the FAFSA. The key thing that you're going to do, you're just going to click on new form. You will already have your FSA ID. The student will start their section, and then the parent will be invited to complete their section. So this is kind of what it's going to look like. As the student sets up their part, they're going to invite the parent, and parents, this is what you're going to do. You can go and you can include both parents if it's a 2-parent household. If it's not a 2-parent household, you can just put the 1-parent information. Again, excuse me, only 1 parent needs to have the FSA ID. So when there is a separation or a divorce, the way the federal government looks at it is what parent contributes at least 50% of the expenses for the child. If you feel as though that it's more than 50, more than 50% is the parent that will fill out the FAFSA. If you feel that you split 50-50, then it's typically who makes the most income. That's how it's defined. Now, I've spoken to other representatives, and they always say that it's 365 days in a year. So there is always 1 parent that does 51 and the other one does 50 or 49. Excuse me, I went too far. So at the end of the FAFSA, it's going to give you an option to fill out your state grant information. So FEA requires for the first year only to fill out an application for their demographics. After that, each time that you fill out your FAFSA, FEA will automatically be updated. Again, FEA is the state grant. Again, that's free money. You do not want to pass it. FEA is very strict on their deadlines. Their deadline is May 1. If you do not make their deadline, majority of the time, you will lose that pot of money. So if you get your FAFSA in early, you fill out your FEA application. If you get any paperwork from FEA requesting additional information, please fill it out. Do not ignore it. Do not lose it. Get it back to FEA as soon as possible. Again, a lot of this is income driven. So when you compare your financial aid office from all those different schools that you're going to get, you're going to take in account of things to look for. So your indirect costs, as you see here, is expenses that's not paid by the tuition, not paid by the scholarship. So as I talked about, that expense that's coming out of your pocket, them going to Target, them ordering food out because they don't like the cafeteria food. You want to look at if they want to live off campus, what the rent's going to be. You need to look at all of those factors as far as your indirect costs. You're going to compare your scholarships and grants. So that's also referred to as gift aid. Some people call it gift aid. Some people will just list it as scholarships or grants. You're going to look at the loans offered. You're going to look at if they're offered work study, or if they're going to do a campus-based job. Each school is going to call it something different. So those are your out-of-pocket costs. You're going to do the math and see what's the best offer for you. Sometimes the best thing to do is do a calculator, a need-based calculator, a financial aid calculator. Every institution will have a calculator on their website. I'm going to give you ours at the end of the presentation. You're going to find one at studentaid.gov. You can put in all your numbers and figures, and they'll tell you what's best for you. So as I promised, some alternative financing. So each school will have their own interest-free payment option. And typically what that means is you'll pay like one flat fee, say $50, and they'll split the payments into, say, your fall payment will maybe split into 3 or 6 months, and then the same for your spring. The best thing to do is pay it and do it for the entire year versus doing 2 payments and then you're doing it twice. So what I mean is, if the payment plan fee is $50, pay it for the whole year. Have it split out for the fall and the spring. Do not pay $50 for the fall and then $50 for the spring to make out your payments. The other is an alternative loan program. The alternative loan programs is typically a loan in the student's name with a credit-worthy cosigner. Try saying that 3 times. The various interest rates will vary. And again, the payment is held off for 6 months. Now, with the alternative loans, each lender, and we're talking Discover, Sallie Mae, Citizens, PNC, everyone has a SoFi. They all have various alternative loans. Most schools will have a page dedicated to the various alternative loans. We actually have a sheet. We have a site that's called Elm, and we have a sheet. They update our sheet each year on our website, and they let you go in and you compare interest rates. You compare repayment options. Some of the benefits and caveats are on the front end. Some of them are on the back end. When I say the back end, that means that the cosigner, can be released after 6 months of payments, on-time payments. If the GPA is a certain GPA at the time of graduation, they may do a discount on the interest rate. So each one will have different options. Again, some on the front end, some are on the back end. And as you can see at the bottom, there's our website where you can go and check out our scholarship page and our alternative loan page. And again, as promised, here's some important websites. Again, studentaid.gov, you're going to definitely go to fill out your FAFSA. There's also a lot of alternative information there for student aid gov. You have your aid estimator and calculator on there. You have FIA's website. Again, FIA has the state grant. It also FIA has alternative loans. So there's FIA's website. They have a lot of information on their website. I'm going to leave this page up. We have some websites where you can go and look for FAFSAs. Excuse me, not FAFSAs, outside scholarships, which is like FastWeb, College Express, College Board. We have some outside scholarships on Arcadia's website, College Post, cost.ed, and scholarships.ed. So I'm gonna leave this page up, and Ms. Martin, that's the end of my presentation. And if anybody has any questions.
Thank you very much. So if you have any questions, please feel free to put them in the Q&A, and I will read them out as we receive them. It looks like we have one there. I'm not sure exactly. It looks like maybe there was a clarifying question at some point where the question just says, are those loan amounts per year or cumulative? So maybe that was when you had the loan page up.
Sure, I can go back to it. I'm thinking it's this page here. So this page is based on their grade level. And as they do take out these loans, it does become cumulative. So what it's saying is for their first year, they can borrow to a maximum of $5,500. Their second year, they have up to $6,500 they can borrow. And for their junior and senior year, they can borrow up to a max of $5,500. So those are the yearly max. They are not the cumulative max on that particular page, unless they're talking here. So this is the cumulative max. This is the aggregate loan limits. So for 4 years, a dependent student can only borrow up to $31,000 with a cap of $23,000 for subsidized.
Okay. We have another question. Do you have to report your savings and your assets to apply for financial aid?
It does go on the FAFSA.
Okay. And what is the percent of your savings and assets you have to contribute to your child?
So again, the Department of Education does the calculations. That's not done on the financial aid end. And I believe the question just asks, what are your assets and what are your savings? I do not believe it says a percentage. And again, we've only seen the demo once. They've only demoed it once. So we're still waiting for another demo.
The next question is, how should kids approach applying for small private scholarships? When I was applying a million years ago, I applied for a ton and got only one. Everyone makes it sound like it's easy.
So again, it's definitely not that easy. And there is a lot out there. They have to do their homework. I'm sorry, I'm going in the wrong direction. I apologize. They do have to do their homework. I would say hit every resource possible, apply, fill out, do their essay, and explain everything about themselves, to follow the instructions to the essay. And you have to realize that the majority of the scholarships are open up nationwide. So they are against a lot of competitives. So don't stop at 5, don't stop at 10. Put as many out there as possible that you can. That's why they have these various ones, scholarships.com. FastWeb, because there is technically a scholarship for just about anything and everything. And it's just, you got to constantly put it out there and don't stop. Some of them are renewable, some of them are not, but just keep doing it. It doesn't hurt.
What should your credit score look like?
I can't give you that answer. I'm going to be honest. And I'm saying that because each lender will have their own expectations of a person's credit score. So my suggestion, again, is you will want to go and look at the comparative list, and it will give you a breakdown, and you will see what's best for you.
What if you want to apply to a school before the FAFSA is available?
Well, you can do the admissions application at any time. I'm sure open enrollment is going on at every school, but for financial aid, it cannot be done until the FAFSA is open. But the admissions process is going now.
All right. And I guess just to elaborate on that as well is you typically don't have to commit to a school until around May. So you can still submit your application and then wait to find out what your financial aid amounts will be before you decide which school that you want to attend. All right, not a question, but a comment. The FAFSA app takes into consideration the number of college students the family has attending at the same time.
Not for the 24-25 academic year, they have taken that off.
So would that be, is that like considered to be more helpful, or it just they're not even considering that anymore?
They're looking at household size, but they're not considering number in college. Again, there's still a lot of speculation. The demo was only in August, and they're still working on getting all the kinks out. They're still working on the calculations. That's why I said I typically do simplification in quotes.
Okay. What is the FAFSA due date?
So when the FAFSA opens, it's typically would open October, say for example, it would open October 23, and then it would close June 30th of 2024. So for this upcoming one, will open in December and close in June. However, you don't want to worry about the FAFSA deadline. You want to be on the state deadline and the school's deadline. So acceptance for most schools' deadline would be May 1st, in consideration the same as the state now. Unless they're going out of state, you need to see what that school, but most Pennsylvania schools, they stay in line with FIA, and FIA's deadline is May 1.
What is the CSS profile?
The CSS profile is what some schools use. We here at Arcadia do not. And that is just that's an added, will add more information than what you would put on your FAFSA. So if they ask specific questions that particular university may take in consideration. So for example, if unfortunately your spouse passed and you received insurance money, you have to put that on your CSS profile, additional income, additional investments, and they take that into consideration when offering you institutional aid.
With it not mattering if you have multiples in college and EFC being the same for both students, will the colleges themselves take this into account when figuring your aid package, even if FAFSA does not?
Each institution will have something different. So for Arcadia example, if you have a sibling already attending Arcadia as a full-time, we have a sibling scholarship. But if you put in an appeal, if there's a situation, a financial situation, you can always put in an appeal. And at that time, the financial aid office does look at those and make a consideration on that. Most of them do.
We'll give it a few more seconds to see. We do have another question pop up. Do you have to apply for financial aid, or is this an option?
It's an option. Again, it's free money most of the time, and it's a free application. So here at Arcadia, we say it's a free application. It doesn't hurt, and you never know. You may get a few dollars, you may get a lot of dollars. My personal choice is, if you get $100 or $50, that's $100 or $50 less out of your pocket. And I mean that as a joke. But it doesn't hurt. And you're not being charged to fill out the FAFSA.
How
And
many?
again, the key thing about the FAFSA, it doesn't look at your current taxes. It goes, one thing that I neglect to mention, and I apologize, is the FAFSA looks at taxes 2 years back. So they call it prior year, and that's the taxes that they're going to be pulling in. So again, if there's something that changed in your income, in your situation, you have the option to put an appeal in.
That was literally the next question. So we'll give it a few more minutes just to see if another question pops up. In the meantime, this presentation again will be posted to the counseling page website. Give it about a day or two. Typically, it's posted within the next 2 days. So if you have any questions, you want to go back to it, please feel free to do that. You can also reach out to your counselor or your child's counselor if you have any additional questions. And I just want to say thank you, Ms. Ware, for giving us all of this helpful information.
Oh, you're welcome. And if anybody has any questions, they can reach me directly. They like my email, which I probably should have put on the front page, is whereL@arcadia.edu.
And is there a chat? Because I'll put it in the chat too. Where at arcadia.edu.
Correct.
All right. Do we have another question? Oh, thank you. Thank you very much, everyone. And we can start heading out. And again, if you have any questions, feel free to reach out to your counselor or to Ms. Ware directly.